Okay, guys, we are going to discuss an alternative and I think an easier way to understand FIFO LIFO and the weighted average method under the periodic inventory system. In the previous video, or in the other video I should say for this chapter, I described this system here, but I've kind of flip-flopped the approach to it and I think it makes more sense. Remember, FIFO stands for first in, first out, or first in, first expense, really is what this means. So anyways, we're going to work this a different way, and if it confused you in the last video, then maybe this will make more sense. So once again, we have a periodic system here, and under the periodic system, we are only keeping track of, well, with respect to inventory, we have a beginning amount that we start with, and each time we make a purchase, we update the inventory account. We do not update the inventory account with each sale. That's the perpetual system, okay? So remember when we did this with the perpetual system, we use this information here. We're using the same information, but we're not updating each time there's a sale, so we can forget about those, and we're just going to look at the beginning amount of inventory plus each of these two purchases here. Okay, so we had a total of 280 units available for us to sell during the month. We started out with 100 units, and right here, and then we purchased 80 at $21 and 100 at $22. The total cost of these 280 units is $5,880. It says based on a physical count, there are 150 units on hand. 280 available. If there are 150 left, that means that 130 were sold. Okay, so now we just have to choose which ones were sold. Alright, so 130, right? First in, first out. These were the first ones here, this $20 category, right? You can think of these like a bins with, we have three separate bins, one for each price category. We have a bin of the $20 ones, a bin or a box of the 21, and a box of the 22. So what should we do first? We need 130. Well, the first ones that come in are the first that are going to go out. So let's take all 100 of these at 20. So that's this right here. Then let's take 30 of these at 21, and that is our 130 units that were sold. Okay, so we're looking at a total of $2,630 of our cost of goods sold. Remember, cost of merchandise, or also known as cost of goods available for sale, is split between what is cost of goods sold and what is ending inventory. So if this is the total amount and this portion of it is cost of goods sold, then that means that the remainder is our ending inventory. Okay, so we can say 5,880 minus 2,630, and that is going to give us our ending inventory figure. Now, when it comes to LIFO, we're going to do something, if you understood what we did a second ago, then this shouldn't be too terribly difficult to wrap your minds around here, because same thing, we had 280 units for a total cost of $5,880. These are the units that are available for us to sell. We have 150 left, so 130 were sold. Well, now instead of working from the top down, from the oldest to the newest, we're going to start with the newest and work up towards the oldest. So we're going to take 100 at 22 right here plus 30 of the $21 category for a total of $2,830 of cost of goods sold. Once again, we have $5,880 as our cost of goods available for sale. The difference between that and the cost of goods sold is our ending inventory. Now, the easiest of all these is going to be this weighted average method. Okay, it's going to use the average unit cost for determining the cost of merchandise sold and the ending merchandise inventory. So remember, we have a total of $5,880 of cost of goods available for sale. There were a total of 280 units. If we average those out, we get $21 per unit, right? So 5,880 divided by 280 is going to give us $21 per unit. We know we have 150 units left, so in order to calculate ending inventory, we can just say 150 times $21. And in order to calculate cost of goods sold, we have 130 that were sold, so we simply say 130 times 21. Okay? Isn't that easy? If we add these two together, we're going to get $5,880. I think this approach makes a little more sense. If you still have any questions, please contact me. I'm here to help and want you to succeed.